All right, let's dive into a really wild idea from trader Tom Hougaard's book, Best Loser Wins. It's a concept that completely flips everything you think you know about trading on its head. And the idea is this. To win, you first have to become an expert at losing. I know, that sounds totally backwards, but trust me on this, because getting your head around this one paradox might just be the most important thing you ever do for your trading career. So let's kick things off with a pretty brutal number. In Europe, brokers actually have to tell you what percentage of their clients lose money. And that number is, yeah, a staggering 90%. Just let that sink in for a second. That is a massive, massive failure rate. For every 10 people who give this a shot, 9 of them walk away with less money than they started with. So the huge question is, why? But here's where it gets really weird. A major broker went and studied 43 million trades, and they found something that just doesn't seem to make sense. Their clients were actually right more often than they were wrong. Over 60% of their trades were winners. So, wait a minute. If they're winning most of the time, how on earth are 90% of them still losing money overall? It just doesn't add up. Or maybe it does. The first piece of this puzzle is what Hougaard calls the supermarket mentality. And the idea is simple. The exact instincts that make you a smart, savvy shopper in everyday life are the very things that will absolutely crush you as a trader. Think about it like this. You walk into the supermarket and you see that something you always buy is 50% off. It's a no-brainer, right? You load up the cart. But trying to apply that same buy-the-dip logic to a stock that's just cratered by 50%, well, that's a recipe for disaster. Why? Because something that's cheap can always get a whole lot cheaper. And this right here, this is the fundamental conflict. Our normal, everyday brain is screaming at us, look for a bargain, don't take the pain of a loss, just hope it comes back. But the market, it operates on a completely alien logic. It rewards you for buying strength, for cutting your losses ruthlessly, and for trading what you actually see on the chart, not what you're hoping for. And the hard numbers prove it. That same study dug into the math, and it is fatal. The average winning trade made about 43 pips, but the average losing trade, it lost nearly double that, 83 pips. And that is the whole problem. Just one single runaway loss can wipe out 2, 3, or even more of your hard-fought wins. So you can see why chasing after a new indicator or some secret strategy is just a total waste of time. The problem isn't the tools on your screen. The problem is the person sitting in the chair. It's all about the decisions you make when you're under pressure. Which brings us to the real battlefield. It's not you versus the market. Nope, it's you versus you. It's a battle happening right inside your own head. So when a trade starts to go against the 90%, they don't feel fear like you'd expect. They feel hope. They hope the market will magically turn around. They hope their analysis will be vindicated. They're just hoping to avoid the pain of admitting they were wrong. And in trading, hope becomes a massive financial liability. But the very second a trade pops into profit, that emotion just does a complete 180. Now they're not hopeful. They are terrified. They're scared to death that the profit is going to disappear. So what do? They snatch that tiny win off the table just to make the anxiety go away. And in doing so, they often miss out on the truly massive move that follows. You know, psychologists have a name for this internal war. It's called cognitive dissonance. It's that awful, grinding mental stress you feel when your belief, hey, I'm right about this trade, is clashing with the cold, hard reality of, wow, I am losing money. And to make that stress go away, we start to sabotage ourselves. And that mental stress leads directly to this checklist of self-destructive behaviors. We do things like holding losers and cutting winners, literally the exact opposite of what we should be doing. We try to be heroes to catch a falling knife. But the cardinal sin, the one that blows up more accounts than anything else, is adding to a losing trade, doubling down to try and get even with the market. So if we know the problem is our own thinking, then the solution can't possibly be a better chart or a fancier indicator. The solution has to be a fundamentally better mindset. We basically need a whole new operating system for our brain. And this is where Hougaard's core philosophy comes in. It's a complete reframing of what it even means to be a successful trader. He says it right out loud. His edge isn't some secret formula. He says his edge is that he has mastered the art of losing. He has trained himself to lose well. Now, being a best loser doesn't mean you lose all the time. Not at all. It's someone who can take a small, planned loss without it derailing their mental state. The loss doesn't trigger some destructive emotional spiral of hope or fear or revenge. They just accept it and move on to the next opportunity.
And this gets us to the ultimate takeaway here. Your long-term success isn't defined by your wins. It is defined entirely by how you lose. Can you take a small loss without it affecting you emotionally? Because that right there, that's the whole game.
Okay, so this all sounds great, but how do we actually do it? Well, Hougaard gives us a 4-step framework he calls flipping the switch. It's a way to install this new operating system directly into your brain. Let's break down this new OS. Step 1. You start every single trade with the assumption that you are wrong. This forces you to focus on your risk above everything else. Step 2. You expect to be uncomfortable. You accept that letting a profitable trade run is going to feel scary, and that's okay. And finally, the 2 most critical rules. When the market proves you are right, you get aggressive. You add to your position. But the second it proves you are wrong, you get out. You never, ever throw good money after bad.
So what this all boils down to is consciously choosing to do the exact opposite of what feels natural and what the 90% are doing. They run from the discomfort of a potentially huge win. You're going to run towards it. They cling to the false hope of a losing trade. You're going to cut it loose without even a second thought.
So the question isn't about finding the perfect strategy to win. The real question is this. Are you willing to do what 90% of people just can't? Are you ready to master the art of losing so that you can finally start winning?